Good morning, everybody, and welcome to our digital business breakfast. My name is Maciej Meder, and I'm a managing director of ZTB in Poland. And I have the pleasure to moderate today's meeting. Today, we would like to present our annual European banking study, which this year is dedicated to the topic of ESG. I'm very glad to welcome today two renowned guest speakers, Tycjan Bielecki from Deutsche Bank. Good morning.
Good morning.
And Rafał Szadurski from Bank Gospodarstwa Krajowego. Good morning.
Good morning.
And to my colleagues, co-authors of the study, Eckehard Bauer. Hello.
Good morning.
And Frank Musek. Good morning.
Hello.
We would like to use our European banking study as a basis for the discussion and ask the guest speakers for their comment. Please note that the meeting is recorded and if possible, please switch off your webcams during the meeting. As always on our meetings, feel free to comment, ask questions using either the chat function or raise your hand function. Okay, so let's go into the discussion. And Eckhard, the key topic of our recent European banking study is ESG. And actually, if you could maybe first explain to us why this topic was selected for this year's edition and what aspects were analyzed.
Yeah, thank you very much, Maciek. I think at the start, it's good to have a common view on the current situation of European banks. Most European banks are currently in a situation of that they have to deal with depressed earnings from yields, for example, increasing external costs due to regulation and so on. This leads to a significant cost-cutting pressure, to market share losses, also due to some fintechs and so on, low growth rates, and this again comes up with depressed earnings and so on. So most European banks are currently in, we call it a vicious circle, where we say they are really captured within the circle. That's the problem. And then there is this huge topic ESG, which is already there and on the horizon for the next years, for the next decades, and so on. And what we ask ourselves, and what's the main question of the study is this ESG topic, is it just another burden in terms of another regulation, other costs in risk management and so on? Or is it, or has it the potential to really break this vicious circle? And is ESG really a way out for European banks out of this circle? That's the key question we want to discuss today, and where we want to look at it. And in the first chapter, we took a current look at the current situation. So in which shape are large European banks currently 1 year after COVID-19 started. It's not away, unfortunately, but it started 1 year ago. And then we really want to look at ESG and what are ESG cornerstones from our perspective, what are very important points here, and especially also the question, is there an earnings potential? Is there a wallet from ESG for banks, and how high could it be? So we want to present here some really concrete numbers. And based on this, we say, okay, there is a potential. Yes, there will be some chances out of this circle. And the question of the third part is how to really approach this market, or how to be part of this market. What do I have to do, and what are some key aspects here? So these are the three topics we want to focus in the next 55 minutes.
Okay, so maybe I think one of the important topics when we are talking about ESG and banking or financial services is actually how we can measure and compare banks in terms of advancement, so how far they are already in application of ESG principles. And maybe I would pass this question here to Frank. I mean, is there already some data which would indicate how advanced the banks are, and to what extent this is a consistent view? I mean, to what extent this is comparable?
Yes, thank you. So if we look at page 15, where we try to take a first step on that topic, long story short is that there is already data available. There are data providers which can be used to get a view on this topic, and this goes both for banks themselves, so how they are rated with respect to ESG, but also for their clients. On the other hand, what this page shows quite nicely is that each of those data providers, and what you can see here is just a selection of the biggest ones, but each of those, they have a different perspective on the topic. So Bloomberg, for example, they look at the disclosure information and try to rate this, whereas the CSR Hub is going more deeper into the topic and also is coming up with a rating how good or bad the company they are looking at is really performing or meeting certain requirements which are put on them by, for example, the society. So long story short is, yes, data is out there, but there is no standard, and everybody has currently a different lens on the topic. And that's also, I mean, one can understand that because it is a new topic. It has grown quite rapidly in the last year, definitely, but also in the years before. But people are still trying to find their view on it. So there is no standard yet. We believe that a standardization is going to come, but right now, yes, data is available, but when you are interested in data, you always have to make up your own mind. What are you looking into? What is the real purpose you're looking for? What type of data you need? And then select the hopefully optimal data provider for that. And just to mention one final thing on that note, we also believe that this whole ESG will become a data game. There will be a lot of data, a lot of new data, which banks need to look into, which banks need to acquire, need to get from whatever source to please the regulators. And we probably have a little bit time to go into this later on, but also to get an understanding on the ESG impact, but also how their own clients rate or what they can do with them and so on. So it will definitely become a big data game in the next years.
Okay. I would be very much interested in the perspective of banks on that topic. I would say especially if I could ask this question to Titian and Rafał. And if you could comment, I mean, how high is actually ESG topic on your agendas, and is it more a regulatory impact, or there are also some other aspects which play here? Maybe, I don't know, Rafał, if you want to start with.
Yeah, maybe I start. I would say in this way that pandemic has shown the benefits of many of the post-financial crisis regulatory reforms. Not only has capital held up well, as shown in the Eckerhart and Frank presentation, but banks have also shown real operational resilience. In my opinion, COVID-19 has acted as a catalyst for change and sharpened the focus on the ESG area by banks, regulators, and governments alike. If we are talking about our agenda and our regulatory topics, I think they are the same for development banks as for universal banks. First of all, we should mention about the consistency of ESG frameworks and how our clients report ESG data. We also should mention about SFDR regulation. There are certain requirements at the end of June 2020. In SFDR, there are new policies on remuneration risk management, portfolio management. For example, for financial products, the decision needs to be made by financial institution if the financial products wishes to be categorized as either sustainable investment, non-sustainable investment, or partially sustainable investment. For non-sustainable investment, in this case, financial institutions should present disclosure on the ESG risk and possible impact on financial returns. Another topic for banks is to incorporate ESG-related risk and climate risk into bank regulatory frameworks. Next point is the 2022 stress testing by assessing exposure from physical and transition risk across asset classes. And maybe 3 more points from our agenda and from agenda for sure for European banks. The green asset ratio. The green asset ratio will have to be presented in reports as early as for 2022 on the basis of 2021. So already this year, banks have to prepare a lot of collecting and monitoring required data. In fact, European banks may gain an edge over the US peers with a proposed ratio, as only two European banks, one UK, one from France, have ranked in the 12 banks globally financing fossil fuels. But it still will be the really challenging exercise. And last not least, still is ongoing discussion on the green supporting factor as a proposal that would encourage banks to finance green-friendly investments. It would lower the risk weights applied, reducing banks' capital requirements, and it will make these loans less costly for banks. And of course, risk weights should also be reflected in the price of the loan of the borrower. Thanks.
Okay, thank you, Rafał. Tizian, maybe, I mean, if you could maybe list or the requirements which are, let's say, top 3 on your agenda.
Sure.
Because we see that also on this page 16 here, there is plenty of different requirements, and probably there needs to be some focus, at least looking on short-term tasks.
Sure. I think from the bank's private sector perspective, one of the key challenges effectively is the sheer number of new regulations, and also a pace of production of the new material, which is an issue considering the size of ESG focused teams and the fact that predominantly these teams are also working in different areas of the bank. There are very few who can afford the luxury of the only ESG focused regulations. The second thing is the sequence of regulations that is coming our way, which makes it sometimes quite challenging for the banks to adhere to. If you look at the data that was mentioned quite extensively in the previous previous discussions, this is indeed an issue because it's difficult for the banks to meet some of the requirements regarding assessment of ESG if the standards of producing the data by our clients are either incomplete or based on voluntary basis and voluntary form. So therefore, some of the key regulations from my perspective that will shape a lot of the work on the bank side are obviously starting with EU taxonomy. We probably have seen all the news recently around the development of the discussion and the threats the platform for sustainable finance has been posing towards the reshaping of the definition. The taxonomy is important because it allows first of all to define the dynamics of the market going forward, because obviously the aim of the taxonomy is support reaching of the net zero goal agreed on EU level and individual countries level, and that will define effectively what size of current portfolio mix is sitting in which color, so green and obviously neutral or brown at the further stage. The second part of that obviously relates on the consequences of risk management and pipeline management going forward and some of the strategies banks might undertake. So that is a starting point. The second point I think that this is something that Rafa alluded to, is Sustainable Finance Reporting Directive, which is going to be replaced by Corporate Sustainability Reporting Directive, which is going to cover far more entities than the current SFRD, which is good because it will effectively standardize ESG reporting, expanding reporting obligation, and likely introduce audit requirements for the data, which now is not the case. And obviously that produces some of the issues that were mentioned in the report. The third, EBA guidelines on loan origination monitoring, which is effectively embedding some of the ESG aspects onto the credit risk management process and the risk appetite. But obviously with the data that is based on voluntary basis, practical implications are going to be quite difficult to assess in the short term.
It's due already mid-June, right?
Yes, but
newly extended loans, yeah.
But that obviously calls for some creativity or substituting data with some of the more wholesale data on a sector basis, etc. But effectively, I would say these are the key regulations for the moment. The climate stress tests that Rafa alluded to are going to be quite important. We will see this year what will happen in UK and France, because these are the starting point. And I guess everyone in the sector is observing quite closely how scenarios will look like and effectively what will require from the banks. But then the subsequent exercise next year undertaken by EBA, also for Polish banks, for the largest Polish banks. And then I expect replicated by PFSA for all of the sector participants, is also going to be a very interesting observation for us and the regulators alike. So I think the aim here is effectively that the change to net zero is not going to happen on a voluntary basis and only driven by sector participants. So the step up by the regulator is probably the only realistic way to try to make it in the deadlines that were defined on the country and on the European Union level. So we're going to see more of these coming. And I think that the last point here, though, is that as a sector, we are not only on the receiving end of the regulations, but effectively most of the regulations published on the European level are having a comments window, call for comments, and another discussion forum, in which I think the Polish sector is sometimes not active enough, because we have ability to potentially shape the final outcome of these regulations. And if not by raising our voice, then I think we'll only have a chance to implement it the way it will be defined by others, which is not a perfect situation in my view.
Well, I mean, if you look on all these requirements, it looks like, I would say, data sourcing, data collection would be a major challenge. Are there any ideas how to collect this data, or maybe how to exchange this data between particular banks, that they don't have to ask the same client and say each time for the same data if he has, I don't know, a relationship with 2 or 3 different banks? I mean, would it be so that each bank would ask client to provide some data? There are some smarter ways how this data should be collected. Maybe Rafa, I remember we discussed it a bit before the meeting, so maybe if you could comment on that.
Yes, we a bit discussed before the meeting about this. I think this in my opinion should be centralized somehow by the Polish sector, because we are touching some really delicate areas of the banking law. So still we don't know how to touch this topic, and I think this year and next year we will be discussing among the biggest Polish banks.
Okay, thank you. So I think one of the regulatory topics which is also vividly discussed, or I think this is something which also will be implemented in the coming years, is actually the impact assessment of climate change risk on banks' portfolio, and also as a result inclusion into, or somehow inclusion into, the capital requirements. Frank, I know that within the study you did some assessment, so if you could maybe share your approach, how you conducted such analysis, which I guess might be also interesting for the coming stress test, which Tiziana mentioned. And what were the major conclusions out of this analysis, Frank?
Yes, as already mentioned, one of the biggest topics right now for banks is to integrate ESG and the risks associated with ESG into the risk management. And most of those banks have to deal with credit risk as the most important risk type. So that is definitely something banks have to look into. And we also, from a study perspective, wanted to get a first understanding where the banks in our study stand on that. So what we did here is a initial high-level analysis based on publicly available data, but also it gives a first view on the setup of the banking portfolios and which of those banks might be impacted by what type of risk or what sort of dimension of this whole climate risk topic would be the bigger factor for those banks. When you're trying to do that, you have to first differentiate between two different risks in that whole climate change debate. There is on the one hand physical risks, which is all associated, all impacts from climate change ending up in the physical world, if you will. So that could be, as we have put it here on the slide, natural disasters, floods, droughts, hurricanes, what have you, all these things. And the industry sectors, especially the corporate clients, they are the ones being most affected. And in those sectors, there are industry sectors which are or which have a higher risk to those physical changes, agriculture to be mentioned here, for example, but maybe also the accommodation business. And we have seen that also as part of COVID and lockdowns, that, for example, the whole touristing industry is suffering very much. And you could apply the same thing when it comes to physical changes. So there might be some areas which are no longer inhabitable, you cannot travel there and so on. So that is definitely something to keep in mind. Also, another viewpoint on that is the geographical dimension, because different regions of the world have a different risk from this physical changes. And the same thinking has to be applied on the second dimension to climate change, and this is what's called transition risk. Transition risks are all the risks stemming from that companies or the whole society needs to change to become more sustainable. And all those bank clients which are not be able to go along that way, they might be left behind. And this is then in the end when it becomes a risk, because if you as a bank have lended money to them and they can no longer pay it back, then that's the risk you have to deal with. And the interesting part here is that it's different industries compared to the physical ones. So that's definitely something to keep in mind when trying to get an understanding how climate change will impact the banking industry. And then again, the geographical dimension has to be factored in. But what we're talking about here on the transitional side is rather changes in the client expectations, in the societal expectations, in potential political changes, which then reflects back onto banking clients. And when you take all of these things together, you get a first idea of your portfolio as a bank. And we have done this based on publicly available data. And the result of our analysis is on page 19. So we have grouped those banks into those who, given on the data we had available, which of those banks might have a higher risk from this transitional side. This is the ones on the y-axis, or which seem to have a higher impact from the physical side. And what one can see here is that the picture looks a bit different based on the region those banks reside in. So those, maybe we call it stars here, those are the Italian and Spanish banks. And most of those, based on their portfolio, seem to have a higher risk more from this physical impact, whereas other banks, and those are the Nordic ones here with those triangles, they seem to be impacted more on the transitional side. The reason here is they currently have a quite large portfolio of mortgages and everything associated with that. And this is one of the sectors which is currently deemed in different studies you can find as one of these sectors which needs to undergo quite a large change, and that then in the end might reflect on the banking portfolio. And then there are others from all over the place which have risks on both sides. What we're just trying to tell you is that it is very important to go through your own portfolio, through all your clients, and get an understanding how those might be impacted from climate change. And this going forward then could result in also different ways of dealing with this client, so to speak. So right now, we believe that, or what we show here is a very first indicative analysis. And again, it's based on publicly available data, but the same thing could be done on your portfolio and actually needs to be done on your portfolio. And we've heard before that this is something also the regulator is interested in, and they will ask those questions going forward. So we also heard about that banks have to show the share of sort of sustainable business, green business, what have you. And what we show here is a first step into these type of analysis, and it needs to become more advanced in the next years. What we also, is there a question or a comment?
No, sorry, I just wanted to add one thing. Sorry, Frank. And I think it's very important to underline, and you said it before, this is really very high level analysis. If you go into detail, then I think you really have a feeling what is it all about? Because if you look at agriculture, for example, it really depends on which part of agriculture is your client, for example, doing, and does he have to change due to climate change a lot or not that much? And where is it located, for example? Where's the real estate or the house or the commercial real estate object? Where is it really located? Is it near a river, or is it on a mountain, or is it whatever in a city and so on? And that's really complicated because you have to consider this in your own analysis, and that's from my perspective really complicated here.
And here we come back to this data topic, which was mentioned before a couple of times. So this is exactly one of these examples where data and an understanding becomes more and more important over the next years. And we also heard that before, and I'm sorry for repeating it, but there is a lot going on also in the regulatory world in asking for these information. So banks also have to disclose these going forward. There are talks about a green asset ratio, which also taps into these type of thinking. So again, there is a lot of new data needed to be able to make such impact analysis, to get this understanding. And it might even be that this is not available in databases, but that you rather have to ask your own clients for this information, or at least parts of it.
So then, if I have a mortgage loan now, shall I expect in the coming months a question from my bank regarding energetical efficiency of the building or my particular location?
I think that's probably a question rather for the representative from banks, and we also have a hand raised here. But yes,
Yeah.
I believe so. That will become a topic, or it will become more important than it might be today.
Tizian, you wanted to add something? Go ahead, please.
Yes, not specifically on the requirements of individual banks, which I think this part of the question is slightly easier to respond because luckily we typically have a energy efficiency requirements that are set by law for specific areas of buildings. So that helps at least to estimate the impact. Even though I come from risk management, I only wanted to re-emphasize the points raised here and mention that these are also relevant for creating a strategy of the growth for the bank going forward, because it's not only a static view of the portfolio, but also shaping of the origination exactly around these criteria that the reporter's referring to. This is an important step because it's also going to shape the structure of the pipeline management and acquisition the bank is going to make and the development going forward.
Okay, thank you. Maybe now let's move towards opportunities, because the title of the study was actually ESG as a unique opportunity for post-crisis banking. So maybe let's come to this opportunity. Eckhard, if you could comment a bit also, because I know that within the study you did an estimation of the revenue pool which is behind the ESG topic, and if you could comment on that, how big it is, how is it structured, and how you made the calculations.
Yeah, we have now heard a lot of what do we have to do in terms of data, and what do we have to do in terms of risk and regulation and so on. And now the question is, where is the money, right? Is there really a business opportunity coming from climate change or ESG? And we ask ourselves, okay, how can we really come up with some kind of a wallet estimation? We started with an estimation from the European Commission. The European Commission says we need in Europe, in total Europe, we need over 1,000 billion euro investments per year to reach our greenhouse gas emission targets. So to be really to reduce our greenhouse gas emissions by 40%, or now currently a few days ago, they agreed on reducing it by 55% within the next 10 years. We need over 1,000 billion investments throughout Europe, across industry sectors, in the residential part and so on. And that was our basis, because we said, okay, when really the economy and the corporates and the SMEs and the retail clients need to invest, this is our starting point. That's our investment needs. And I think it's really important to understand that this is really a yearly number. So we really have to invest this money per year. And if we now translate this investments and coming from the different industry sectors, translate this into banking products based on a typical refinancing structure of a corporate and a household and so on, we then come up with this investment needs based on different products, loans, leasing, bonds, and so on. And if we now put in a margin here, then we can come up with some kind of a banking wallet. So what is the potential wallet of this climate change induced investment needs for European banks? And based on this very high level top-down approach and estimation, we say it must be around 27 billion, something like that. So that's the right part of this chart here, and you can see this is divided by corporate banking, investment banking, retail banking. You can say, okay, the figures are a little bit higher maybe in the corporate banking, a little bit lower in investment banking, whatever, but that's across all banking products. That's some kind of a first estimation what this climate change really could could mean for banks in terms of wallets. Now the question is, okay, 27 billion per year. That's important. New wallet per year, 27 billion. What does this mean? How much percentage is it, right? And if we look at the largest 50 European banks, we are talking about additional revenues of about 5%. Now you could say, well, 5%, that's not too much, right? But I think two points here. The first one is when we talk about especially the large European banks, they all have suffered declining earnings over the last years due to low yields and some problems here and there. And so the overall earnings, they were declining in the past, clearly. So that's one point. And to get 5% additional earnings, it's maybe not too bad. And the other point is, and that's from my perspective very important, this 27 billion does not belong to every bank. It's really that there will be some banks that will get a larger piece of this cake, let's say this way. They will get a higher share of this wallet because they are ahead in terms of having the right products, approaching their clients, and so on. So they will be really in a much better position than maybe other banks that are that are doing a follower approach and say, okay, we want to be regulatory compliant here, and then let's see what the market brings and so on. That's from our perspective the main point here. So additional earnings is really a point. And then if you really go ahead here and if you really focus on this, we think you will get a much higher share of this wallets in the future. And as I said before, this is not a yearly topic or a topic for the next 2 or 3 years. It's really a topic for the next decade or even the next decades. If you look at the overall plan to be carbon neutral in 2050, then you really can see that we need this investments not in the next few years, but really in the next 10 years, 20 years, 30 years, and so on. That's really important. So it's not just a short-term thing. It's really when you decide what you want to do here, it's really also a long-term strategic decision. And I think you said it before, that's not really a short-term decision.
Mm-hmm. Okay, I mean, it looks like there are huge investments to be done in such cases. Usually, I think this is the place where also development banks play a very crucial role. That's why a question to Rafał, how this topic is embedded into the plans of BGK. I mean, are there any specific programs or initiatives which we already can participate in as banks, or is it something also already announced for the future? What will be triggered here by the ESG topic?
Yes. Just one comment regarding what Eka has said about the needs. We see a lot of needs from Polish economy regarding circular economy, and it seems that it could be around 500 billion euro until 2040. Regarding BGK, I think sustainable development is one of the core elements of our new strategy. It appears as extension of the bank mission and vision. The bank vision is to become a leader of programs for sustainable development. And in fact, we act as a stimulating bank for Polish economy and mainly supplements the banking sector. It means we step into area of longer financing and most demanding projects. In 2020, we launched the project designed to prepare BGK to conduct responsible business activities in line with the principle of sustainable development. We divided this project into 6 streams: building awareness, strategic management, ESG, scoring system with taxonomy, risk management, sustainable financing, and integrated reporting. The project objective is to prepare the bank for the assignment of the ESG scoring by external rating agency. And if we are talking about business, in fact, we are the part of the group joint initiative on circular economy, so-called 5+1. It's a group of European Investment Bank plus 5 top European development banks with BGK, CDC from France, CDP of Italy, ICO from Spain, and KfW from Germany. The purpose of this group is to accelerate the transition towards the circular economy, and we plan to launch in next three years a number of innovative and environmental investment projects worth at least 10 billion euro. Additionally, BGK, as a development bank, we are a European Commission implementing partner in InvestEU program. The InvestEU fund is expected to mobilize more than 370 billion euro of public and private investment through EU guarantees. And of course, main pillar of the InvestEU fund will support sustainable infrastructure. So from our point of view, I think as a development bank, there will be really busy and excited time. Thanks.
Okay, thank you, Rafa. ESG topic, I mean, we see in terms of revenue pool, in terms of investments, it's a significant business for banks. And what I'm wondering, is this topic covered by, I would say, old typical products, or can we see also some developments on the product side? Frank, I know that you scanned several markets and did this analysis. If you could share your findings, what are the interesting ESG like products on particular markets?
Yeah, exactly. And as you mentioned, or to your question, so what we found, and let's go to page 25 already. But what we found is that there are already quite a large number of products available across Europe. So we had a look at some of selected regions of Europe, and we scanned the sustainability reports, the financial reports, the internet pages of those banks, internet pages of fintechs, and so on and so forth. And what our take on this analysis is that there are differences between different countries or regions, and there is the one or the other here, especially the Nordics and United Kingdom, which seem to be a bit ahead when it comes to sustainability related products, let's call them like that. And then there are others which, if you just look at sort of the product basis and availability, which might be lagging behind. On the other hand, there is also maybe we call it different approach into these topics. So for example, in the Nordics, there was a big push by the government and the whole society in that respect to become more sustainable, to become greener, to look into these things. Whereas if we take Germany, and that also relates a bit to what Raphael mentioned, in Germany, this topic is mostly driven by KfW as the biggest development bank, and they create those more sustainability linked products, and banks are then more or less the distribution channel for those. So that's also differences we found. But long story short is there is already a lot of products out there. Some markets seem to be more developed, and in those developed markets, we have nearly every bank which has the one or the other product, and which also has different solutions depending on if one is looking more into the investment space, like funds and stuff, or the financial solutions, which would be a credit business, bonds, these type of things. But you can also find more scoring solutions, advisory solutions, all those things. And what we just would like to initiate with this study is have a look at what's out there if you are also thinking about launching green products, and also have a look not just at your very direct competitors, but maybe also what's happening in other markets, because there is the one or the other interesting bit available one can take inspiration from. On page 26, we just have put in a exemplary overview on what we found for the Nordic market. So you can read it here in the middle of the screen. So if one looks at the investment business, then there are definitely funds with an ESG mandate, and that's something we find in every market across Europe. But then there are also something like sustainable pensions, which have a link to it, or particular investment platforms for clients which only look into these things, crowdfunding solutions, all these nice things. When it comes to the financing solutions, then, and this also comes back to your question, so it is not new products as such, but sort of classical products for new purposes. And that's what you could call these green bonds, sustainability linked loans, green mortgage loans, right? It is the same solution, but looking into more sustainable outcomes, if you will. And then depending on that, there are certain product components in it. So it could be a lower interest rate for these type of things. It could be conditional arrangements throughout a certain period of time. And if these conditions are met, then, for example, the interest rate or something else is reduced, and so on and so forth. So that's quite interesting. And what we also found, and again, this is just examples here, is that some banks offer scoring solutions. So there are already banking applications which provide an individual carbon footprint for products those people have bought with their credit card, for example, or just for all the payments which go through their current account. So that's something which a couple of banks provide right now. But there is also solutions where banks have started to help their clients in looking for the best way forward, for the best solution. And we heard about circular economy just a couple of minutes ago, and there are examples from the Netherlands where banks are becoming part of initiatives on circular economy, trying to use or help their client base in going more into that direction. Or there are examples, again, in the Nordics, where banks have joined platforms which deal with carbon dioxide and trying to bring their clients closer together to deal with these topics. So there is a lot of interesting things out there, and it might be the one or the other idea which could also be quite interesting for your individual product if you intend to do more in that space. But what we also have to mention here, nearly all the things I've just alluded to before, is that the majority of these products are all targeting in the same small pool, what we call here the dark green business. And this also then means that there is already a quite high competitiveness in this area. Our view is rather that it makes more sense to focus on what we call the transition business. So really find those solutions together with your client to support them in making the transition to a more sustainable setup and more sustainable environment and society. So that is where we believe the big money lies. And we also have seen, based on the numbers Eckhard showed us before, that there are big investment opportunities, and banks as the intermediary here also have, from our point of view, good opportunities and good ways going forward to really help the whole economy and the whole society to change. However, that again means, and sorry for that, data, understanding which are the clients who have the potential to go there. How can I really find them? How does this relate to my reporting requirements? It might be that your own assessment of this is sort of a good client with a good potential is not automatically something the taxonomy sees as sustainable and green. So that's also something to keep in mind and always be able to reconcile that. And then this then also trickles down to, okay, how can I help my client? What would be the right offering? What would that mean for my pricing? What are the components of this product? So this will be a very interesting time in the next months, weeks, years ahead. So we believe we will see a lot of change. And to be honest, it's just something banks have to go into, and it probably makes good sense to be more or less at the forefront or a sort of early follower on that to tap into this big pool of opportunities.
Okay, thank you, Frank. Before
Maciej, just one comment. What Frank said, just the example of the innovative products. I think you mentioned one product of ING in this presentation. Denmark issued the green bonds, conventional green bonds with two commitments. In this model, these commitments are split into financial commitment and the commitment for doing greening investments. And both stripes are separately traded on the Danish market. So this is the real example of creating new products for pension fund and investment fund, which they are willing to buy.
Thank you, Rafał. Before I head on to Tycjan, maybe short information to our participants, to the audience of the webinar today. First of all, if you have and you want to ask a question, this is the very last moment to post it here on the chat. I think we still have 5 minutes to go, and then we can pick up on 1 or 2 questions. And secondly, also Kamila posted here a link to a short questionnaire just to take 1 minute to fill in and give us feedback about the meeting and also some ideas about the future meeting. But now I would directly go to Tycjan and also ask the question regarding these new products, because Deutsche Bank is a large international group, also very active in this ESG topic. Also, I think recent quarter results were posted very good. So the question is, I mean, do you have here some new products which you would like to share with us, or some ideas where is the attention looking here also on this page 28, where we differentiate between this dark green and transition business? So what is your focus here?
Sure. I think, first of all, the Deutsche Bank is obviously committed to ESG. We have a publicly announced target of reaching 200 billion ESG financing and sustainable assets by 2025. And this is precisely what we're doing. We have 10% share of the green bonds issuance on the global market. And it's also fair to say that this market, the ESG financing, is quickly becoming very competitive market, but it's also one that is dear to many and on a personal level. And that is quite an important aspect, because it is driving a lot of innovation. Now, one of the risks that obviously we are seeing generally on the market is the risk of greenwashing. So in order to avoid this or to mitigate this risk, the Deutsche Bank is relying on some of the aspects that are verifiable. For instance, we have a number of credit products which are linked to some of the SDG targets. That might be, for instance, 10% reduction of the greenhouse gases emissions by the specific entity within the time frame of the product, or share of women in the leading managerial position. So it's not only about economic, but also about governance and social aspects that might be taken into account. This is then typically verified by an independent auditor and then coupled with the independent opinion of the ESG scoring agency of our choice and the choice of a client. Now, this is a quite important aspect, because when we talk about transition, we should not only concentrate on the economic aspects of the ESG abbreviation, but also look at the other items, because these precisely, we see our role as a journey with the clients towards becoming a greener and eventually going to the net zero successfully, rather than just being the one who will be tapping solely green opportunities, abandoning the clients who are not there yet. So this is our responsibility as a bank. Another interesting product on the other end of the spectrum is a green deposits, which is type of a term deposit where the cash is held on a fixed tenor and invested in the green assets of the DB's green asset pool. As you may or may not know, DWS, so the asset management arm of Deutsche Bank, was one of the founding members of the Net Zero Asset Managers Initiative, which is now covering all of the main asset managers. Therefore, the pool of potential investment, both in our credit products and other aspects, is verifiable. We know what's there, and we can ensure our clients that the green deposits is going to be invested in line with the principles of the products. This is also quite important for the clients, because in line with the reporting towards their clients, their shareholders, they are able to demonstrate that even matters and placing it, or the deposit can be done by supporting the sustainable aspects. Now, the third item, which is not part of DB's spectrum, because we don't cover retail in Poland, but I think it alludes quite nicely to the previous forms of discussion, and the items Franks was referring to, is the Clean Air program, which aims to enhance heat generation by private households. And I think the assumption of the products are probably known to the audience here, but I'd like to emphasize one important aspect, that this is exactly type of a blended finance, whereby we have a cooperation of the development bank or the other state agency with the private sector, because the blended finance is one of the key drivers for effectively making the change happen. It's not only going to be the private sector. And the last point is that refers to the DEAR element, the DEAR on a personal level element, is that I have a honor to be a mentor on the current CFA Society contest on developing the AI-powered ESG product by the groups of various students who are competing to win it. And the aspect of the innovation that these young people are bringing, but also maturity in terms of knowing the usefulness for the financial sector is very striking. And I think this is where the next wave of innovation in the products is going to come, not only from the banks, but also from the students who are already employing the latest techniques in AI with the typical credit and investment knowledge.
Thank you, Christian. I would pick up on the one question which we received regarding definition of green assets or sustainable assets, and if the banks are flagging green assets according to internal methodology or really follow the taxonomy or some kind of certification. I think this is something which you also referred to, and Christian, how you want to comment on
that? From my experiences, from my knowledge, I think the bank, European bank, they have some internal methodology. For example, the Development Bank of Germany, they prefer best-in-class assets. So they prefer, for example, for liquidity, to separate the bonds with the best rating in ESG. Some others they are just take the methodology of not doing harm.
Tycian, do you want to comment on that? We don't hear you. I don't know. Some issue. I think we have some technical issues, so maybe I will pass to Frank, because we also have another question regarding ESG assets, if they got preferential risk-weighted assets ratios in other countries. I understood, Frank, that this is a process which is still undecided, right?
Exactly. So right now,
you are muted. I don't know what happened here.
okay, hopefully it's working now.
Yeah, it's not working.
Yes. That's something we did not go into today, and this is being discussed as part of this whole topic. Will it show up somehow in the capital requirements, Pillar 1, Pillar 2? So that is intensively debated. We don't see anything today, right now, but it might be the case that in 2, 3, 4 years, the regulators come up with a methodology where they either incentivize this more greenish business, which could mean lower RWA weights, or they might put a malus on the more brown business, or it could also be a combination of those, but it remains to be seen. Today, we don't see it.
Tycian, go on.
On top of that, I would echo that and say that, first of all, the Corporate Sustainable Reporting Directive, which is likely to replace SFRD presently, will set the scene in terms of data reporting and the reliability of this data, which will allow to use it. But secondly, also would like to raise to your attention that CRR is looking into definitions of specific reporting with regards to non-financial reporting. And eventually, I am pretty sure that we will see the sustainable assets having a preferential risk weight. This will also depend on the pace of meeting the goals of 2030 and 2050 as defined by EU and respective country levels. If the progress is slow enough, then I think that the regulators will step up their efforts and help this. Similarly to what we have seen happening in Canada, where you have a target price of the carbon emissions set for 2030, which allows sector to adjust and use the remaining 9 years to amend the ways they do business and help their clients transition not to have the shock effect of that one.
Okay, thank you. Thank you, Tycian, for the comments. I think we are at almost 5 past, so we will be finishing the meeting today. So I would like to thank you for your contributions, Rafał, Tycian, Frank, and Eckhard. Thank you very much for your valuable comments. I hope that this topic is so interesting that we will continue the discussion on that in the near future. If one of the participants would like also to have a presentation of our study, which we will also distribute after the meeting to you, but we can also organize a dedicated meeting for your bank, for your institution, if you would be interested in, or if you'd like to go into some further discussion on this topic, feel free to contact me. So once again, thank you very much for participation today, and I wish you a nice day. Thank you. Bye-bye.
Thank you.
Thank you.
Likewise.
Thanks.
Bye.